How will inflation and Fed policy affect the markets in 2023? I'm Sam Millett, manager of fixed income at Commonwealth, and that's what we'll be discussing today. Inflation captured headlines and shook markets this year, leaving investors wondering where we go from here and what it means for their portfolios. I'm joined by three of my colleagues who provide more insight on what to look for in U.S. and international markets in the year ahead. First is Chris Fasciano, portfolio manager at Commonwealth. Equity markets don't generally like rising rates or uncertainty, and we've had plenty of both in 2022. With the market down pretty much across the board, are there areas where investors may find some upside in 2023?
Well, Sam, I've been at this for more than 20 years, and I think that all previous bear markets have created opportunities to add value to portfolios. This one's no different. Certainly, inflation headlines will drive equity markets in the short term, but a lot of damage has been done. This has created more attractive valuations, and as inflation begins to roll over, it should lead to better fundamentals. A good long-term investment requires both attractive valuations and solid fundamentals. We believe the best chance for that combination to be realized over the next 12 to 24 months is in the U.S., including in both value and growth. Looking down the road, we're optimistic about growth due to the secular nature of the asset class. We also believe the opportunity set will be broader than just a handful of stocks, and that should offer a better environment for investors than we've seen recently.
Thanks, Chris. Next, I'm joined by Peter Essley, Senior Vice President of our Investment Management and Research team. After years of record low interest rates and anemic yields, we saw a massive sell-off in fixed income as the Fed began aggressively hiking rates, resulting in higher yields across the sector. Now, bond investors who have experienced double-digit losses are wondering what's next. So, where do we go from here?
Well, it all hinges on one thing, Sam: inflation, which is currently at a 40-year high. Clearly, it has become more structural than transitory, and the Fed has reacted by moving from an exceptionally accommodative policy to one that's like targeting inflation with a bazooka. And while I think they'll succeed, a lot of the pricing pressures are already beginning to go away. Throughout most of the last 2 years, consumers spent money on tangible goods like TVs and cars while they were stuck at home because of the pandemic. While all that consumer demand was focused on one segment of the economy at a time when supply chains were severely impaired. Well, the end of the pandemic has changed all that. Now, consumers want to do experiential things like travel or go to concerts and sporting events, which means all that demand for goods has shifted elsewhere. And the result is that prices are moderating as supply outpaces softening demand. We expect that trend to continue, which should bring down inflation and rates, setting up a nice period for fixed income in the year ahead.
That's encouraging news, Peter. Thanks. Finally, here's Brian Price, Managing Principal of Commonwealth's Investment Management and Research team. International developed and emerging markets have really struggled in recent years. Will they continue to lag the U.S. in 2023, or are there reasons to expect a turnaround?
Well, Sam, I think the answer depends on the path of the U.S. dollar and the geopolitical environment. Risk aversion has been elevated since the beginning of the war in Ukraine, and it's hard to imagine a reversal of that trend unless there's meaningful progress toward a peaceful resolution. This dynamic has also helped to strengthen the U.S. dollar, which has been another notable headwind for foreign equities. However, we think there are reasons to be constructive about the asset class for investors with a long-term time frame. Relative valuations are attractive now, and sentiment is at a negative extreme. This could set the stage for a powerful counter-trend rally if we see improvement on the geopolitical front.
Thank you, Brian, for that insight. In summary, while the outlook remains uncertain, we believe there are pockets of opportunity, especially if inflation moderates throughout the year. For more on what we'll be watching, click the link in the description to download our 2023 Economic and Market Outlook.